Hello everyone, this is Latish. In today's video, we are going to talk about a new asset class which is available in the market, SIFs. So we will compare the three NFOs which are there in the market. Let's begin the video. India's investment landscape is changing. SEBI has introduced specialized investment funds, schemes that sits between mutual funds and portfolio management services, which are PMS. They promise mutual fund style taxation and oversight with the strategic flexibility you usually see in PMS or AIF. Today, we will dive into three new SIFs: Magnum Hybrid Long-Short from SBI Mutual Fund, QSIF Equity Long-Short from Quant, and Altiva Hybrid Long-Short from Edelweiss. We will cover details about each of these SIFs, how they work, and what are the details which you should be aware of before looking to invest in these. Now, before we move into the detailed comparison, here is something important which I would like to share. I want to introduce you to Rupeezy, a platform trusted by lakhs of investors for over 20 years to make smarter investment decisions. It's 100% AMFI and SEBI compliant. Account opening is free with zero AMC charges. And here is the value add. When you open your Rupeezy account using the link in the description, you also connect directly with me as to get the required guidance on investments, as I am empaneled with all of these mutual funds as distributor. That means I can help you decide whether to invest in these SIFs, NFOs, mutual funds like FlexiCap, debt funds or arbitrage, or even a combination of all of these, depending on what best suits your portfolio. So if you're serious about building a portfolio with an expert guidance, you can get started on Rupeezy today. Let's understand SIFs. SIFs are SEBI regulated strategies that blend mutual fund governance, transparency and tax efficiency with AIF-like flexibility. Typical minimum amount to invest is 10 lakh rupees, much lower than a PMS or AIF. They can also use derivatives for both hedging and also to get alpha. Shorts are capped at 25% of the portfolio and no leverage is available. For investors, equity-like taxation applies. Long term is 12.5% beyond 12 months. The fund itself doesn't pay any capital gains. With this basic understanding, let's unpack the three funds which are there currently in the NFO stage. Let's start with Magnum Hybrid Long-Short. This is from SBI Mutual Fund. This strategy aims to provide regular income as well as long-term growth by investing across equity, debt and derivative strategies. It's an interval scheme, meaning you can subscribe daily, but redemptions are allowed only twice a week, which is Mondays and Thursdays. Let's look at some key features. Investment objective is to generate regular income by using derivative strategies such as covered calls and arbitrage in the equity markets. Plus, they will also invest in debt and money market instruments. And also to seek long-term capital appreciation through unhedged equity exposure. Let's look at the asset allocation. Gross equity exposure is 65 to 75%, but only 0 to 10% net equity. This is after the hedging, which they will be doing through derivatives. Debt makes up 25 to 35%. Unhedged derivatives up to 25%. And REITs and InvITs, they can invest up to 10%. The benchmark is Nifty 50 Hybrid Composite Debt 50-50 Index, which will be used. Entry and exit terms. Minimum application is 10 lakh rupees. Exit load is 0.5% if you redeem in the first 15 days, 0.25 if you withdraw from 16th day to 1 month, and no load after 1 month. Taxation and regulation, treated like mutual funds for tax purposes, and this is fully SEBI regulated. This strategy uses derivatives not just to reduce volatility but also to potentially earn in downturns. The fund targets reduced volatility, multi-asset holding and better risk-adjusted returns. It's ideal for investors who want equity-like returns with an income orientation and lower drawdowns. Next, we have QSIF Equity Long-Short Fund from Quant Mutual Fund. This is again an open-ended FlexiCap long-short strategy that can invest across entire market capitalization. They can also go up to 25% short in their overall portfolio. What are the highlights? The NFO opens on 17 September 2025 and it is currently ongoing. QSIF invests in listed equity and equity related instruments with limited short exposure through derivatives. Why should you consider QSIF to your portfolio? Now, based on what they have shared, adding SIF strategies can reduce portfolio volatility and improve risk metrics. They also provide unique source of alpha. This is through the short positions which they will be carrying. And it also enhances diversification, particularly during market corrections. It's the only fund that combines the flexibility of a FlexiCap mutual fund with ability to short the market up to 25% of their portfolio. QSF uses a FlexiCap portfolio with a beta management, and minimum equity exposure of 80%, which will be a long plus short strategy. Cash equity and equity arbitrage can go up to 65 to 100% of the assets. Unhedged derivatives longs will be 0 to 35%. The benchmark is going to be Nifty 500 TRI. The goal is to deliver lower volatility and fewer drawdowns over market cycles. The third SIF is the Altiva hybrid long-short form, which is from Edelweiss. What is the investment objective? To generate capital appreciation through equity and equity-related instruments and income through a mix of arbitrage, derivative strategies, special situations, and fixed income investments. How will be the portfolio constructed for this SIF? The strategy combines 4 drivers: fixed income, which will be between 20 to 40%, which will invest in quality debt instruments. 40 to 60% will go into arbitrage or covered call strategies. This will be for future arbitrage and also covered call, writing to capture low risk returns. Special situations can be between 0 to 10%. These are opportunities like IPOs, buybacks, mergers, QIP, and also index inclusion or exclusion when it happens. Derivative strategies can be between 10 to 20%. So they may take a long or a short equity trade, and also option strategies like straddles and strangles. The benchmark which is going to be used is Nifty 500 Hybrid Composite Debt 50/50 Index. The structure is an interval scheme, so investors can subscribe daily but redeem only twice a week. In this, it is Mondays and Wednesdays. Minimum application size is 10 lakhs. Exit load is 0.5% if units are redeemed within the first 180 days. And there is no exit load after that. Even though the minimum commitment is 10 lakhs, systematic transactions can be done with 1000 rupees installment after the initial investment of 10 lakhs. So which fund is for whom? First one, Magnum. If you want stability first, income focus and low net equity exposure, and you're okay with twice weekly liquidity, Magnum fits for you. Think of it as a smooth ride hybrid with equity taxation. QSIF is if you are looking for an equity centric and comfortable with active data-driven long-short decisions. Altiva, if you are looking for a steady income from debt and arbitrage, but want a little kicker from special situations and options income, Altiva is designed for you. Let's do a quick side-by-side comparison. Magnum and Altiva are interval strategies. You can invest daily, but exits are twice in a week. Magnum on Monday and Thursday, Altiva on Monday and Wednesday. QSIF is open-ended, so you get daily liquidity like a regular mutual fund. Benchmarks, Magnum and Altiva both track Nifty 50 Hybrid Composite Debt 50/50 Index, reflecting their balanced stance. QSIF uses Nifty 500 TRI because it's an equity-centric flexi-cap strategy. Asset mix and risk, Magnum keeps net equity very low, 0 to 10%, and leans on debt and arbitrage to steady returns. QSIF is mostly equity-heavy, keeping at least 80% in equity exposure across longs and shorts, with flexibility to short up to 25%. Altiva strikes a middle path. Debt plus arbitrage are the core, with special situations and derivatives as enhancers. All three observe the SIF minimum of 10 lakh rupees. Magnum and Altiva offer direct and regular with growth, dividend, and SIP, SWP, STP options. Altiva's systematics can run from 1000 rupees after the initial investment. These are sophisticated strategies. They use derivatives and short exposure, so risks apply. It is always recommended that SIF should be part of your portfolio, but it should not be more than 10 to 15% of your overall portfolio. So ensure that you stick to these portfolio allocation when you're investing in these high risk assets. So that was a video about the new asset class SIF which is launched in the market. If you are looking for help in terms of understanding this better and also help in terms of identifying which is best for you, you can always reach out to me at the number which you see on the screen. If you did like this video, please share it with your friends and also subscribe to our channel if you have not yet done. Thank you for watching and have a good day.